If you run a business and wear clothes, then this video is for you because you've probably seen influencers on social media saying that you can deduct your clothes and accessories that you wear for business. They say that your Rolex, your suit, your shoes, your makeup, your jewelry, and all other clothes that you wear for work are ordinary necessary business expenses in the pursuit of income under IRS 162A. And while it may be true that you would have a less successful business if you showed up naked, barefoot, and ugly to your business meetings, these social media influencers are using their brain, not actual tax law, to recommend that you show up naked to an IRS audit. And in this video, we're going to go through case law so you can have the framework to determine when you can deduct business clothing and stop listening to confident, unqualified buffoons on the internet. And if you don't know me, I'm Jasmine DiLucci. I'm a tax attorney, CPA, and an enrolled agent. My day-to-day is actually running my CPA firm and my tax law firm, but I started posting on social media after a decade of practicing tax to show you actual tax law. All right, clothing. We all wear clothes, even me. Here are lots of videos where I wore clothes. In fact, I wear clothes in all of my videos because they would literally get taken down by YouTube if I were naked. So by definition, it is quite literally 100% ordinary necessary that I wear clothes to post these videos, as well as do literally anything for my business, because it is just not appropriate for me to be a naked tax attorney, and I would by definition not be running a successful CPA or tax law firm and instead be running a totally different kind of business if I did that. Well, even though all of that's true, tax court doesn't give a shit. And of course, tax court's interpretation of tax law actually matters, and a person's confident online declaration does not. So as always, let's very briefly start with the foundation of how tax law actually works so you can clearly see why so many people in this area are so very wrong. Tax law has hierarchy. At the top, we have statute. That's the Internal Revenue Code. But we cannot just interpret that ourselves. Instead, we look to Treasury regulations and court cases that tell us the legal interpretation of the statute. So for clothing, the relevant statute is IRC 162A, which tells us you can deduct ordinary necessary business expenses. But we also have a competing statute, which is IRC 262A, which tells us you can't deduct personal expenses. So to see the actual tax law and how to resolve this conflict for clothing and accessories, we look to court cases since we don't have any Treasury regulations on point. Now, since wearing clothes and running a business at the same time is not a new thing, we have so many court cases that there was a bright line rule developed by the courts that is now used in all, so 100% of clothing cases, to determine whether the clothing meets the requirements of IRC 162A to be considered a business deduction rather than a personal expense. The courts have outlined a three-part test that you must meet. 1, the clothing is required or essential in the taxpayer's employment. 2, the clothing is not suitable for general or personal use, and that's the tough one to meet. And 3, the clothing is not worn personally. So it's the second requirement that's the problem, that the clothing has to not be suitable for general or personal wear, because often clothing is essential for employment and only worn to work, but the majority of clothing for most professions is often suitable for general or personal wear. So that's the area where we'll dive into court cases so that you know how to make sure you meet this requirement if you're looking to deduct your clothing. Let's go through court cases that show just how seriously tax court applies this test. First, we have Barnes v. Commissioner, and in this case, a Ralph Lauren salesperson was required to purchase and wear Ralph Lauren clothing while working in a Ralph Lauren store. And despite common sense telling us that sounds like a freaking business expense, the entire clothing deduction was flat out denied because it was clothing that is suitable for general or personal use. And this is not the first or only court case to deny a clothing deduction in this exact scenario. Another example is Pevsner v. Commissioner, where the circuit court found that expensive boutique clothing that was required to be worn by the manager of the boutique clothing store was not deductible, despite the fact that she would never ordinarily have bought that very expensive clothing for personal use. And what we've learned from circuit court cases, including this one, is that the requirement of whether the clothing is suitable for general or personal use is objective, not subjective. The court explains, under an objective test, no reference is made to the individual taxpayer's lifestyle or personal taste. Instead, adaptability for personal or general use depends upon what is generally accepted for ordinary streetwear. So one more example of how far tax court takes this interpretation of suitable for general or personal use is Mella v. Commissioner. The taxpayer was a tennis instructor at a club and purchased tennis attire as was required by the club. For example, the shoes he purchased lasted him only 2 to 3 weeks and had a better feel-in cushion when he played tennis. Despite that, the court denied the clothing deduction by applying the objective test of whether they were suitable for general or personal wear and stated, "It is relatively commonplace for Americans in all walks of life to wear warm-up clothes, shirts, and shoes of the type purchased by the petitioner while engaged in a wide variety of casual or athletic activities." Now, that's when it's not deductible. So let's go over when it is deductible, which is, of course, meeting those 3 elements of the test, but the one you have some control over is when you put your logo on your clothes, because tax court has found that this makes your clothes not suitable for general or personal use. So for example, you buy a shirt for work, not deductible, but if you put your logo clear across the top, it's now considered not suitable for personal use based on tax court cases. So a couple court examples. Williams v. Commissioner, where the taxpayer had a leather uniform with the helmet and steel-toe boots when riding his motorcycle for business activities, and the leather uniform had a company logo, so it was deductible, but the helmet and shoes did not have a logo and they were not deductible. We also have Levit v. Commissioner, where the taxpayer had tuxedo shirts with the casino's logo on them that were deductible, but the black shoes he wore to work at the casino were not deductible. But beware, because I've seen some tax advisors say that all you have to do is put a tiny logo that's hidden on the inner seam. Those tax advisors haven't read court cases because substantively that does not meet the requirement. What we know about tax court is they always look to substance. And remember that the rule is not that putting your logo makes the clothing deductible. It's that making your clothing not suitable for general or personal use makes it not deductible. If you put a logo that is not visible, it doesn't take brain surgery to figure out that you have not met the requirement. And finally, when is your clothing easily deductible? No logo needed. Let's run through some examples of items that meet the 3-part test. Jazz shoes for a dance teacher, riding trousers for a jockey, scrubs for a doctor. We've got welding jacket and gauntlets for a welder, and sequined clothing for a professional violinist. You should be able to see the theme here, okay? It's when you buy something that is more of a clear uniform for the business that an ordinary person would almost never just buy for personal reasons without being in that profession. But in almost all of these cases, these items were allowed, and then any general use items were denied by the court in the same case. Like the violinist court case, the sequined clothing was allowed by the court, but the taxpayer had other clothing that was disallowed even though it was also used in performances, but it was considered suitable for general or personal use. So there you have it, the actual tax law. Our rule is your clothing and accessories must be 1, essential or required for work, 2, not suitable for general or personal use, which can be satisfied with a clear and visible logo, and 3, worn only for business. So maybe this answer is still surprising to you, and you think, wow, I would never have guessed this, and I don't know how to look up tax law. How do I learn more tax law so that I'm not naked in an IRS audit? Well, you should sign up for my free tax workshops and free community at the link below, because real tax help should be available to everyone. So I'm on a mission to provide the right resources so you can stop listening to gurus who mislabel their gross negligence as tax planning. And if you like this video and you have as much fun as I do going through court cases and you want to see more detailed tax law, then comment below and actually let me know. That is actually how I know what type of content you want me to make. And as always, for more actual tax law from a tax attorney, CPA, and enrolled agent, subscribe.